Hey friends, welcome back to the channel. I'm Iggy, and I've been covering stocks, finance, CPF, and everything related to building your wealth right here in Singapore. The investing Iguana is now ranked 8th in the 2024 Influential Tigers by Tiger Brokers. As of August 2025, we've crossed the milestone of 1 million reads and 58,000 likes. We're also about to hit a new peak with over 1,000 videos and more than 600,000 watch hours. I focus on local, regional, and even some global economic trends because understanding what's happening beyond Singapore sometimes gives you that precious edge. Today's episode is your inside look at the Straits Times Index, or STI, movers and shakers for August 1st, 2025. If you want to level up as an investor here in Singapore, you'll want to stay tuned. I'll go through the top 5 gainers and losers on the STI. We'll analyze the reasons behind their moves and, more importantly, what it means for your portfolio and financial journey. Let's get a quick sense of the market action. On Friday, the STI closed at 4,153.83, down 0.48% for the day. This marked the 6th consecutive session of losses, a losing streak we haven't seen since April. Worried? Don't be. The STI is still up more than 20% in the past 12 months. We're just catching our breath after a pretty strong record-setting run above the 4,270 mark earlier this year. All right, kicking things off with our top gainers. These are the stocks that, despite a sea of red, managed to swim upstream and post notable gains. First up is Jardine Matheson Holdings. This blue-chip conglomerate rose 2.7% on the back of strong first-half results. Underlying profits soared by 45%, hitting an impressive $798 million. It wasn't just luck. Jardine Matheson's diversified portfolio, including buoyant results from Hong Kong land and several new strategic deals, played a big part. For Singaporean investors, this shows how companies with a finger in many pies can really weather different storms. The group has been reducing its debt and recycling capital aggressively, which is always a good sign. Here's a question to think about. Is stable, diversified growth more attractive than chasing a single hot sector? Our second gainer is Seatrium, which posted a 1.32% jump. This company, formerly Sembcorp Marine, is on everyone's radar in the offshore and marine space. Recently, they put a lingering corruption case behind them by settling with authorities, clearing a big uncertainty cloud. But the real story is their record order book, now sitting north of 23 billion Singapore dollars. That's a lot of ships and rigs to build. With energy transition picking up in Asia, Seatrium's renewed focus on sustainable offshore platforms could mean they're lining up for years of steady work. So, is this the start of a long cruise or just a quick pit stop? Third, UOL Group advanced 0.58%. The developer has benefited from Singapore's resilient real estate market. The recent government push to support the local stock market, including $1.1 billion committed for market development, has been especially good for property counters. UOL's well-timed launches and solid execution continue to impress. If you have CPF or SRS funds earmarked for property-related stocks, it's worth watching how the sector rides these newfound tailwinds. Next, Singapore Airlines clawed back some recent losses. It's still making headlines with strong flight demand now that travel is almost normalized. The airline's wide route network and reputation for value are drawing in major investors, despite recent fuel price fluctuations. For frequent travelers and dividend chasers, this could be a stock to watch. Rounding out our top 5 gainers is OCBC Bank. Despite reporting a slight dip in quarterly profit, OCBC announced a healthy dividend of 41 Singapore cents per share and showed resilience in net interest income. Management has navigated a tough global rate environment with a steady hand. As interest rates stabilize, Singapore's banks, OCBC included, remain crucial CPF and cash portfolio cornerstones. Let's turn our attention now to the top 5 losers, the stocks that saw the steepest falls in Friday's session. Sometimes these setbacks are fleeting dips. Other times, they're warnings of deeper troubles. At the top of the losers board was Keppel DC REIT, down 3.4% to $2.29. Now, this might raise an eyebrow because Keppel DC REIT has been in the sweet spot of surging demand for data centers, thanks to AI and cloud adoption across Asia. In fact, their distributable income just jumped 57% year on year. But the drop likely came from investors locking in gains after a sustained rally, perhaps spooked by global tech jitters. For long-term investors, the fundamentals remain solid. Could this dip be a rare buying opportunity as more business and cloud giants seek reliable data centers in our region? Second was Sembcorp Technologies Engineering. It saw a pullback after a year of outsized gains, over 70% up year to date. At times, strong runs attract profit takers, leading to short-term dips, even if the business remains healthy. ST Engineering's record order book of nearly $30 billion still paints a bullish longer-term outlook, especially as governments and corporations ramp up spending on security and sustainable urban solutions. Wilmar International, another STI heavyweight, slipped 1.31%. This is a classic commodity story. Palm oil prices have turned choppy due to record Indonesian output, squeezing Wilmar's agribusiness margins. Remember, stocks like these rise and fall with the cycles of their underlying materials. The key is diversification and timing. Fourth among our losers, Yangzijiang Shipbuilding. Shares eased by 1.24%, even as the company retained a strong order book and net cash position. Recent global news about U.S.-China trade tensions have been unsettling for exporters, and investors may simply be positioning for more news flow. Do you see this as a risk or as a smart entry point for a well-capitalized shipbuilder? Fifth, Sembcorp Industries, a name that's been on a tear, up about 65% so far this year. The retreat here likely comes down to investors locking in profits after exceptional gains. Sembcorp has pivoted towards renewable energy in a big way, and while the big growth may pause, the longer-term potential remains bright. Before we move into my overall outlook and personal hot take, here's a quick reminder. For deeper dives into these movers and shakers, including detailed charts, financial breakdowns, and potential action plans, check out the Investing Iguana Substack. You'll find the direct link in the video description. That's where I unpack each stock's fundamentals and share additional strategies you won't want to miss. So, what's my big picture read after a week like this? Despite a string of red days, Singapore remains a safe harbor for regional capital and is quietly attracting fund flows as global volatility picks up. Government support, a strong banking sector, and resilient earnings keep me optimistic. Watching the STI pull back to around 40,150 after hitting highs above 4,070 feels more like a healthy breather than the start of a tumble. If you're building a CPF or SRS portfolio for the long term, view dips in quality stocks as a chance to accumulate at better value. Here's my advice for the Singaporean investor today. Focus on well-managed, dividend-paying companies. Keep some cash ready for tactical opportunities, and don't stray from your game plan because of temporary market noise. Singapore's fundamentals look set to hold, and every downturn opens the door to a new upswing. So, we've broken down today's August 1st STI movers and shakers, and you've gotten my personal take on what it all means for your investments here in Singapore. If you found this video useful, please give it a like, share it with friends, and subscribe to the Investing Iguana channel so you don't miss our upcoming market insights. For those who want the ultimate edge, our premium members get exclusive early access to all our videos, sometimes a full week before anyone else. That means you receive my detailed analysis and urgent market alerts directly in your inbox, quickly enough to act before the crowds. All for just $1 a month, less than a kopi at your favorite hawker. Think of it as your daily dose of smart, actionable information delivered before the masses. Ready to join the inner circle? Hit the link in the description below and become a premium member today. And before you go, check out my recent video diving deep into Singapore's banking sector outlook, where we unpack what's next for DBS, UOB, and OCBC, and what it means for dividend seekers during choppy markets. Stay invested, stay informed, and as always, happy growing.